If you're a Montgomery County, Maryland homeowner, you'll want to watch this video to see what's happening in the real estate market right now. I'm going to go through some key statistics that you need to know to be on top of what's happening with real estate in our county. So let's dive right in. I'm going to go through a quick overview of what's happening with detached single-family homes here in Montgomery County. If you're interested in getting more details with charts and graphs and an interactive version that you can play around with, all you have to do is click on the link below and you can sign up. It'll get delivered to your inbox either weekly, monthly, or quarterly, whatever you like. So let's jump right in. First, we'll look at the Market Action Index. This is a great little sort of basic speedometer, which gives you a feeling for what the balance is between supply and demand and some other characteristics that the people at Altos Research put together in their own algorithm. So as you can see, we're sitting at 61, which is solidly in seller's market territory. 30 is the dividing line between buyer's market and seller's market. It was at last month, at this time, it was at 64, so it's moved down a little bit, but not a dramatic change in the past 30 days. Now let's move over to the real-time market profile. This is a nice short version. There's all kinds of other charts down here that go further back. They go 3 years, and you can see other data. But this is a quick overview that I'll share with you. First, we'll start with the median list price. You can see that it's sitting at $775. It's been sort of bouncing around for the past couple of months. It was up into the middle eights, but now it's sort of dipped down, but it's come back in the past few weeks from this low point of $750 up to $775. Next, we'll look at the median price of new listings. So these are properties that have just come on the market. And as you can see, they've been sort of jumping around in the low middle sevens, but for some reason, I'm going to have to do a little deeper dive on this one. They jumped up to 800 in the past week as of the 16th. Median days on market, as you can see, back in June, they were down around 14 and they're now up to 35. They took a pretty quick move up. But they've sort of leveled out, kind of since the early part of August. It was a little dip down, but they've leveled out in this 30 days, give or take, range for about the past month. Price decreases, so these are properties that have been on the market and have taken a price decrease. Those were, back in June, they were down at 20%. Then they moved up pretty quickly into the 30s, and they've been sort of hovering in that low 30s range for about the past month, maybe 6 weeks. So that also has sort of leveled out. Inventory also, you can see that it was down at 532. Again, this is for detached single-family houses in Montgomery County. And then it moved up, and it's also been sort of at this plane in the 600, middle 600s range. Took a little dip down right here. This is because of Labor Day, and then it's moved back up. So inventory has held pretty steady for the past 4 to 6 weeks. And the Market Action Index, which this is a 90-day view of the little speedometer over here. As you can see, it was up close to 90. Actually, even before this, it was very close to 100. And it moved down pretty quickly in the sort of spring and early summer, but now it's sort of leveled out in the 60s range. So the past 4 to 6 weeks, there was a lot of change in the market in the late spring. It seems to have sort of stabilized. We'll see how things go after the last interest rate hike last week when the Fed raised their rate. Now, most of the mortgage rates had already anticipated that raise, and those had moved up prior to that. Actually, I noticed that right after the Fed raised their rates, mortgage rates took a little dip. I think there were probably some people out there who were thinking that the Fed might raise their rate 1% or 1 point, instead of the 0.75 that they did. So there was just a little rollback, not much, but a lot of people think that the Fed's rate is what drives mortgage rates, and it's not. It's 10-year treasuries is really the thing that drives mortgage rates, and they're independent. They certainly are influenced by that, as is a lot of the economy. So I hope you found this useful. If you have any questions about real estate, I'm happy to help, or if you just like to chat, all my contact information is below, or you can just leave a remark, leave a comment in the remarks, and I'll get right back to you. Hope you have a great day and a terrific weekend. Take care. Bye-bye.